Um, Hello everyone. Um, Today we'll be looking at the liquidity ratios. So we'll be touching at the current ratio, the creditor's payment period, the debtor's collection period, and our stock turnover, stock turnover. Sorry. So let's start with our current ratio. So our current ratio, like it means the ability of a business to settle its short-term commitments. So the definition is the same as the liquidity, like what is meant when they say like the business is liquid. So it means the business can pay its debts without like having to struggle. It means the business is very liquid. The business is able to convert its asset into cash. So by that I meant liquidity. I was explaining the concept of liquidity. You are liquid, you can pay your debts. So the formula for the current ratio is given by current assets is to current liabilities. So, but then the key thing to know when dealing with financial indicators or financial ratios, you have to like always divide by your right hand side. So let's say you have 10,000 here, you have 5,000 here, you'll divide by your right hand side, which is 5,000. You'll divide 5,000 divided by 5,000, then 10,000 divided by 10,000. That is the key thing. So sometimes you will not be given the total current assets. You'll have to calculate your current assets. So just know that current assets are made up of trade and other receivables, our inventory or stock, and our cash and cash equivalents. So those are the building blocks for current assets. So if you are not given the total current assets, you just have to add these three things. So the current ratio must be greater than 1, which means if it is greater than 1, the business is liquid. The business can pay its short-term commitments or debts or loans maybe. So, but note that the current ratio must not be too high. If the current ratio is too high, like 5 is to 1, 4 is to 1, maybe 3 is to 1, it means that it might mean that we have too much stock. Remember, in our current assets, we have inventory as part of our current assets. So if the current ratio is too high, like 5 is to 1, it might mean that we have too much stock, and it's not good to have too much stock on your shelves because it might be stolen, it might become obsolete. So make sure that you have a decent current ratio, like maybe 2 is to 1, 1.5 is to 1, as long your current assets exceed your liabilities, you still remain liquid. But then if you have something like 0 less than, maybe you have an answer like 0 comma something is to 1, it means your current liabilities exceed your current assets, which is not a good thing. So make sure that your final answer is greater than 1, but not too much. Maybe 1 comma something, 2 comma something. So that's safe. It means you don't have too much so being tied up. So this is possibility if the current ratio is too high.